Hello and welcome. You're watching Business Today Television and I'm Sakshi Batra. This is a special edition. You know that we've been running a series on NDA Economics Budget 2024-2025. This is a show which is specially designed to help all our viewers really understand how to really assess what could be expected from the upcoming union budget that is going to be presented on July 23rd. We've discussed many sectors that could find mention in the upcoming budget and also favor with the government in terms of higher allocation and also increased support from the government. This in itself is leading to a lot of opportunities for investors at large to start building up their portfolios with some such stocks within their portfolios right ahead of the budget, because those such announcements could actually benefit these particular stocks over the long run. Today particularly, our focus will be to understand on the banking and the financial services sector, what are the key expectations this time around from the union budget. My colleague Surbhi is first up, joining in on this show to help us understand what do we expect from the budget. Will there be any big bang expectations? What could we really see, especially from the banking and the financial services sector space? And then we will invite our top guest, Mr. Kranthi Bathini, who will be joining in very, very shortly to help us understand how to assess these big expectations and translate them into opportunities. Let's start off with Surbhi first. Surbhi, take it away. What are the big expectations that you're garnering from your sources?
So yes, when we talk about the financial sector expectations from the budget, one of the biggest things that is being closely awaited by the markets as well as investors is the government's decision on the IDBI Bank stake sale. Now remember, this transaction has been going on for quite some time, and in January 2023, the DIPAM had also received several expression of interest for the bank stake. The RBI is currently going through several applications, and it's expected that the budget will throw some more light on the government's stance on disinvestment and how this transaction is taking place. And there's also expectation that if the IDBI Bank transaction proves successful, then more government banks could be taken up for stake sales, but that will have to be watched. Apart from that, there are also expectations from analysts and investors on the banking side. A recent report by State Bank of India has raised the issue of growing bank deposits and has called for a tax parity between bank deposits as well as those such as mutual funds. So remember, right now there's a problem of bank deposits and there's need to grow them. So that's one of the things. Other things that the markets and investors are hoping for is more clarity on ESG bonds, green financing, and several other issues. So let's wait and see what happens in the union budget.
Before that, updates. Well, three key things that have been highlighted by Surbhi right there. First up will be, of course, the disinvestment and clarity on disinvestment of IDBI Bank and several other banks that could be seen as mentioned within the budget. The next one is as far as the parity between deposit rates is concerned within the banks versus the kind of interest that one garners from investing in mutual funds. And the third one is ESG bonds and green financing is that is something that the investors can hope to really find mention in the upcoming budget. Now, let's now welcome our guest on the show. Mr. Kranthi Bathini is with us. He's the head of research at WealthMills Securities. Warm welcome to you, sir. Good to have you with us. Well, that's something that most of our sources are telling Business Today Television as to what could be the key expectations. Could you add on to that if there is anything else also that viewers can expect from the upcoming budget? Is financial sector going to be an important one for the government to address within the upcoming budget?
Definitely, the financial banking and financial services is definitely going to be the center in terms of the budgetary announcements are concerned. But as the Surbhi had rightly mentioned these points, there will be a greater emphasis with respect to infrastructure, lending, and finance also is concerned. That's also one of the key areas the market is expecting with respect to the long-term infrastructure lending is concerned. That's where the market also anticipating, apart from the regular news items what Surbhi has shared. IDBI, the news has been due from quite a long time. This issue, the disinvestment in IDBI has been not getting clarity from past 3 years. Probably this budget can get more clarity with respect to the disinvestment is concerned, and whether this is the beginning for the other PSUs where the government want to go at a faster pace with respect to the disinvestment is concerned. We are going to get a greater clarity in this budgetary speech is concerned by Finance Minister Nirmala Sitharaman.
Okay, got that. Let's start dissecting this a little further and helping all our viewers understand, how should they view all of this expectation and translate it into opportunity now. First up, what Surbhi was mentioning as far as the disinvestment is concerned of IDBI Bank, and once there is a greater clarity, there could be other banks also that perhaps could be on the radar. PSU banks have actually given stellar set of results and returns to all the investors in the recent past. Will this space continue to find favor within the budget and continue to perform beyond the budget as well? And how would you really advise an average retail investor looking at the PSU banking space as an investment opportunity?
One thing, Sakshi, we have witnessed a stellar rally in PSU banks, and majority of the PSU stocks are concerned, especially coming to the PSU banks are concerned. They were on a long consolidation phase. If you see, look at the charts of PSU banks on a 10-15 years basis. These banks have been on a consolidation phase. And as the government brought greater clarity with respect to increasing the efficiency and also the disinvestment news are concerned, okay, these banks were re-rated. And also the PSU banks books have been become very healthy in the past couple of years' time. So that's where the markets, the relative valuations of these banks on a longer term basis look very attractive for the investors. And we have witnessed a stellar rally. From going onwards, we need to see how the disinvestment drive government is going to start, whether this disinvestment is going through OFS and what kind of investors are going to come into these banks, and also how the credit growth of these banks is extremely crucial going ahead. Right now, the stocks are rallied with the expectation the of the disinvestment, and also the valuations are looks very attractive when compared to the private sector players. That's where we witnessed a strong rally. Majority of these PSU banks are concerned. Now onwards, what we can see is there's going to be a stock-specific action. Depends upon the how the credit growth and what kind of technology and the efficiency metrics. These are the parameters that are going to drive the stock prices going ahead. But we need to get a greater clarity from the finance minister with respect to the disinvestment is concerned, with a due timelines that can give greater flip to the investors to consider these banks for a longer term investments are concerned at these valuations also.
Okay, got that. Let's also discuss the other space, and that is the big ask of parity between the rates on deposits as well as mutual funds. There has been a consistent move, more people getting added, more financialization of savings really happening. People are trusting the world of mutual funds, equities much more because of the lesser interest rates that they end up getting within deposits. Now, this is a huge ask. Whether this will really happen or not is something that only the budget will be able to tell us. But with the kind of expectations that are building around, how should an average retail investor really look at this scenario?
Actually, with respect to my personal opinion in this concern, I don't think so. The finance minister is in a hurry to bring the parity between the investments and savings, because always investments comes up with a greater risk, whereas savings, the risk associated relative risk in savings is at a much lesser. So I don't think so. You can't expect a country like in India, which is growing and which is need a lot of growth capital. So finance minister may not be in a hurry to bring parity immediately with respect to the tax regime is concerned with respect to the investments and savings. I don't think so, but it is a wish of the investors, but it may take some more time to bring parity between the investments and savings.
Okay, got that. Let's also discuss the ESG, decarbonization, green deposits, green financing as some of the key thoughts that most of the analysts have come out with as to what should be on the top radar of the government in the upcoming budget. How is this likely to translate into opportunities for investors? Is NBFC space going to be a keen important watch? Is it going to be the large private banks that will continue to benefit with such measures if they come in?
Yeah, always the large banks are going to get benefited, but we need to see the greater clarity with respect to the ESG bonds are concerned. But it is a at a very starting phase, Sakshi, at this point of time. How the things are going to emerge, how the interest of investors going to be in these ESG bonds are concerned. But it's a very important area, but we can't ignore at this point of time. But how how much the greater emphasis will be given to the ESG bonds is extremely crucial going ahead. India is the country which is the league to decarbonize, and ESG is one of the important thing that's going to play in the days to come. But given the kind of the geopolitical environment politically at this point of time, and what's happening in US and how the things are going to pan out, these are the also external factors that are going to have impact on these ESG things are concerned. So it is at a very preliminary stage. We need to wait and watch how things are really going to take place with respect to the ESG drive and ESG bonds are concerned.
Okay, got that. And meanwhile, viewers, we need to keep an attention on the markets as well. Fresh records being built. It's a century on the Nifty yet again. It's at the high point, and you do see 24,420 now on the markets. Very strong surge coming in. Let's also pull up the top contributors to the Nifty at this point in time. Remember, it's Maruti Suzuki that's 7% higher in trade today. 12,867 is the kind of buzz that is being seen, and it's the top mover on the Nifty right now. Apart from this, the top contributors include ITC, that's contributing nearly 24.4 points on the Nifty gains. L&T that's contributing 10.4 gains, as well as SBI is contributing about 9 points to the Nifty move at this point in time. Strong surge that can be seen within the Nifty. Your own sense, Mr. Bathini, where do you see the markets headed? Last 2 or 3 days have been largely consolidating after this one-way rally, but again there seems to be action back on the D street.
Yes, actually, the beauty of this market is look at the rotation in the leadership. Today, Maruti have taken the leadership where Maruti was in a consolidation phase in the past 6 months. We can see here and there there's some spots in Maruti, but today it's taken the leadership. ITC has been in a consolidation phase that taken the leadership that made the markets to trend in a higher note at this point of time. That's what the secular bull market is right now. So whenever the market gets into consolidation phase or any dip that's giving, definitely it's a wonderful opportunity for the retail and every investor to take part in Indian markets. Right now, because the anticipation of the budgetary outcomes and also the earnings season we are about to start, and it's led by it's given a complete positive sentiment. The monsoon has been progressing very well. So these are the sentimental factors that's keeping the market buoyant, led by the flow of liquidity, both from domestic as well as FPIs are concerned, overseas is concerned. That's what leading the market to a newer trajectory every time.
Okay, got that. So that's the kind of move that we can expect within the markets. Let's ask you, sir. So it's been the banking space that was that largely stayed out of the recent run up in the markets. Only it was last 1 week, 10 days odd when the Nifty bank started to buzz again catching up with the trade that was being seen on the benchmark indices. Stocks like HDFC, ICICI, Access, these started to move again. But the rally again has not been one way here. It's moved up and it's consolidating again. There is not a convincing move that's coming back on the private sector banking front. How are you really looking at the large cap private banks right now, and what would you say is the course ahead?
Yes, actually, with respect to the long-term fundamentals are concerned, banking and financial services remains to be one of the key sector to look at in India. As Indian economy is expected to grow around 7.2% to 7.5% on a consensus basis, one of the sector that's going to get benefited because of these growth premise is banking and financial services definitely. But one one uh, I can say one bump or uh, one of the main reason for we can see some kind of consolidation is at this point of time across the globe, not only in India. The main focus is the most of the money has been getting into the newer sectors at this point of time. But one rate cut, most probably, when we are everyone crossed fingers when the rate cut will come from US or in the recent RBI minutes. There are two MPC members already asking for a rate cut. We need to see the early rate cut can boost the credit growth in India, so that can really benefit the banking and financial sector. But for the investors are concerned, of course, banking and financial sector in India, especially the private banks are concerned, they have been testing the patience. On the other hand, uh, the PSU banks have had a stellar rally. For a longer term investors are concerned, one can add the stocks in their portfolio for a medium to longer term basis. There might be some kind of consolidation because we need to see how the results are going to be. We are expecting a decent set of earnings from these stocks. And one of the other thing with respect to HDFC Bank, which is the big boy in Bank Nifty, the major fruits had to manifest in the earnings of the companies. That's where the current jolt with respect to HDFC Bank is concerned. But investors with a longer term horizon, one can add these stocks for a on a staggered manner for a long term basis.
Okay. And lastly, I want to ask you, Mr. Bathini, that within all the constituents of the banking and the financial services space, where do you see outperformance really coming in within the budget and outside of it? And how would you advise? So large private banks is something we've discussed, PSU banks we've discussed, NBFCs, and even the housing finance companies that are now betting big on affordable housing as a theme. How do you advise investors to really approach the entire basket? Should one stick with the leaders of all the pack? How should one be really approaching this space?
Uh, Sakshi, with respect to investing, serious investment is concerned, one can always keep the large cap private sector banks in their portfolio for a medium to longer term basis. And also there are PSUs like State Bank of India, Canara Bank, and Bank of Baroda. These are the stocks one can look for a medium to longer term basis on a portfolio investing is concerned. Of course, there are many set of banks that keep on buzzing here and there, some kind of momentum uh, plays. These are all. But for the serious investments are concerned, these are the stocks one can keep on the radar. Coming to NBFC space is concerned, it is also looks very attractive at this point of time. We also joined by the fintech companies also joining the other hand the bandwagon of these banking and financial services. And also we have keep on coming up across the names like the small finance banks. These are also coming onto the radar. But the main overhang for these stocks has been the credit growth. Of course, we are getting a decent credit growth, but to get the pace of credit growth to take a faster pace, most probably one rate cut that can use greater fillip these stocks on a medium to longer term basis. So it all depends upon the risk appetite of the investors because we have a wide variety of banks and we have a wide
Yes.
variety of NBFCs are concerned. So one need to chip in where their investment horizon and risk appetite to get a alpha returns as per their risk appetite is concerned.
Okay, well, thank you so much, Mr. Bathini, for being with us and sharing your advice within the banking and the financial services space, the upcoming budget, what kind of opportunities it can throw, and how should investors really be approaching PSU PAC, private banks, NBFCs, and the housing finance companies within that space, and that upcoming budget expectations too. Thank you so much for being with us on this show. Viewers, we'll wrap it up at that, but do stay tuned as action continues on the other side on Business Today.
Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching our special pre-budget programming with the subject of NDA-nomics. On the show today, we take a look at India's real estate sector, where it stands today, and more importantly, what is likely in the budget and whether